This is Mike Paulenoff, MPTrader.com, January 31st, 2010. This is the fifth and final installment in our Charts of the Week video update. All right, let's take another bank to contrast with the Bank of America analysis that we finished a few minutes ago. This is Wells Fargo, what you see on the screen, a daily chart of Wells Fargo. And you can see that Wells Fargo also has a contractionary type pattern itself. All right, that is to say, it had an initial correction of $6.50. It recovered almost 2/3 of it, but couldn't extend it. So that's the first coordinate on the upside. Now you had a second coordinate on the downside, and Friday's high. Friday's up move was interesting because Friday's move in Wells Fargo actually, while the market was tanking, Wells Fargo was acting pretty well and actually broke above its October-January down or resistance line at around 28.90 and continued up to 29.17 or so, but failed to continue to revisit the January high and instead reversed and closed down on the day. Now, well, actually, did it close down on the day? The close was 28.45 on Thursday, 28.38. I'm sorry, 28.43. So it did close down on the day. So you had a minor reversal, but all that minor reversal did was to put Wells Fargo, return it back into its contractionary range, which I think now tells us that Wells Fargo is going to go lower. The question is, will it be able to preserve this range, or will it drop out? Now, it looks to me like the weakness will break through the 50-day at 28.10 and probably retest this low on January 27th at 26.88. Now, keep in mind that as we speak, or as of Friday, Wells Fargo was trading above the 50, the 20, and the 200-day moving averages, which is a much better position than we discussed in the Bank of America situation. So Wells Fargo has a much healthier chart in general. That is not to say that it won't catch up on the downside if the overall market declines, or if there is a reason for some mini panic to set in the financials. Now, given all the news about the banks, you would have thought that if Wells Fargo was going to have a problem, it would have had it already. But we can't overlay that and have all that much confidence in any of these financials, at least not yet. So what do we see here? We see the contraction. We see, what kind of pattern it is. But let's analyze the pattern. The big move down in between October and December was $6.50, and if we use that in the swing in a swing objective, a swing move correction, like we did in Bank of America, where could that take Wells Fargo if momentum started to get going on the downside? Well, $6.50 off of this 29.43 area puts you at about 22.70, 22.65, and if that's the case, then we have a substantial decline ahead of us in Wells Fargo if Wells Fargo broke, in particular, this trend line and the prior pullback low, which was 26.88. If we condense the chart to get a bigger picture of what that would mean, right? So here's the bigger picture of Wells Fargo, and let's just clean this up a little bit so we can see the markings. Let's get this out of here. Okay, so here would be the objective at 22.60 or so. Well, does that coincide with anything else? Yes. You see this support earlier in the up move in May, June, or May, June, July. 22.30, 22.10. That is a very important support plateau if Wells Fargo breaks down from here. In addition, Wells Fargo what are the Fibonacci support levels for Wells Fargo? Well, a 38% retracement would take Wells Fargo to 2250, and that should sound familiar because that's right in here where the prior support is. A 50% retracement would take it to about $20. So, in conclusion about Wells Fargo, it is acting much better than Bank of America, and certainly much better than Goldman Sachs. But it is not immune from a generalized market sell-off. So those of you who are long or want to be long Wells Fargo, I would say this, that Wells Fargo is relatively safe, and I'm relatively friendly Wells Fargo, as long as Wells Fargo holds above the January 27th low at 2688, and wherever the 200-day is at the time of that break. Chances are, if Wells Fargo breaks down in the next 2-3 days, the rising 200-day will be right around the same level as the January 27th low. And if that breaks, then we can start calculating perhaps a move down to the 2250, 2210 area in sympathy with the swing target off of the October high at 3153. Finally, to get traction on the upside, if Wells Fargo turns out to be immune and does not break 2688, then a break to the upside, a rally to the upside, not to be redundant, that takes out 2943, which is the January high, should trigger a very powerful upside follow-through that will take Wells Fargo to new highs. That won't happen in a vacuum, I don't think. The market will have to be turned up. The financials will have to act better. Perceptions of the banking system and sector will have to be much healthier to have Wells Fargo take off to new highs.